Dr. Baba Saheb Ambedkar Open University.
Hello my dear student, welcome to Dr. Baba Saheb Ambedkar Open University Ahmedabad in the Chaitanya studio of Dr. Baba Saheb Ambedkar Open University. Today we gather for the learning objective of the video lectures, subject titled Financial Market. With the journey of financial market, as we learned in the previous session, that the introduction of financial market, meaning of financial market, then the functions of financial market, then the nature and role of financial system. And in that, my dear friends, we learn the different approaches over there. That is a structural approach and functional approach over there. With that manner, today we begins our journey to defining financial market as a component of financial system. As we discussed in previous session that in a structural approach, in a financial system, the three functions or three components are the important in nature. The first is financial market, second is financial intermediaries, then or we can say the financial institution, and lastly the financial regulators. And with that nature, that structural approach, here we discuss the point called the financial market as component of financial system. A financial market is a market where the financial instruments are exchanged over or the trade. The financial market provides the three major economic functions over there. It clearly signifies that, my dear friends, in financial market, the investors or lenders and the borrowers and the users are the important. And for that, we can say that the financial instruments are exchanged in nature. And thus, my dear friends, we define that the three functions are important in economic, or we can say the economic function play an important role in financial market. The first function is price discovery. Second is liquidity. And third is, my dear friend, reduction of transaction costs. With that discussion, let's define the first function, that is price discovery. The price discovery function means that the transactions between buyers and sellers of financial instruments in a financial market determine the price of a traded asset. Here asset, I use the word assets. That include that financial assets also and the tangible assets also, my dear friends. The second most important function, that is liquidity function. The liquidity functions provides an opportunity for investors to sell a financial instruments. Since it is referred to as a measure of the ability to sell an asset at its fair market value at any time. The third most important function, that reduction of cost transaction, or we can say the reduction of transaction cost. The function of reduction of transaction cost is performed when the financial market participants are charged and or bear the cost of trading a financial instruments over there. And the function of, we can say that the reduction of transaction cost, it determines the different transaction cost, which are the asset specificity, second is uncertainty, or we can say the uncertainly, then frequency of occurrence over there. If these three attributes are defined, at that time we can say that the reduction of transactions cost of that financial instrument has to be the bear accordingly. And with this function, we determine these three attributes, which is the important in the financial market, when we can say that the financial market is a component of financial system. So this is the important function. Then my dear friends, we defined that the financial system and economic growth. The very learned fellow, the Van Horn, defined that the financial system as the purpose of financial market to allocate savings efficiently in an economy to ultimate user, either for investment in a real asset or for the consumption. And the Christie has then opined that the objective of the financial system to supply funds to the various sectors and activity of economic in a way that to promote to the fullest positive, or we can say the possible utilization of resources without the disestablishing the consequences of price level change or unnecessary interference with individual desires. At that point of time, my dear friends, you can say that the financial system makes an economic growth eventually and in an adequate way. According to the Robinson, the primary function of the system, that is financial system, is to provide a link between saving and investor. For what? For creation of a new wealth and to permit portfolio adjustment in the composition of existing wealth. It clearly signifies that the growth of wealth, that is a wealth maximization approach, is an important where the system adequately appointed. And this is the primary function of system, that to provide a link between what, my dear friends, savings and investment for creating a wealth. From the above definitions as discussed by the, we can say that given by the Robinson and the Van Horns, etc., it may be said that the primary function of financial system is the mobilizing, or we can say the mobilization of savings and the distribution for industrial investment and stimulating capital formation to accelerate the process of economic growth. With that, my dear friends, we can say that the primary or preliminary function of that financial system is to mobilizing saving and to provide that savings to those who need it and for possess the economic growth in adequate way. So accordingly, my dear friends, we can say that financial system mainly defined or allocated between this three way. That first is savings, second is finance, and third is investment. While the investment is adequate at that time, you may confer to the capital formation and then it becomes an economic growth. Thus, my dear friend, the financial system and economic growth has the direct relationship. There is not an indirect relationship. There is a direct relationship where the financial system mainly focusing on what, my dear friends, savings, that mobilizing that savings or mobilization of savings. When savings are mobilized, at that point of time your finance capacity is increased and then it converted into your investment. And at that point of time, my dear friends, the capital formation may be at adequate level, which is play an important role in nature. And the economic growth is consisting with that capital formalization. When that capital formation and investment and saving and finance are conferred with that, at that point of time, my dear friends, the financial system is in adequate and appropriate manner. And thus we can say that there is a direct relation between the financial system and economic growth. So this is what, my dear friends, that define the financial system and economic growth in a one chart. The next topic is that we can say that the interrelationship between the varied the segments of the economy, that the economic growth and goals, it's ultimately defined or depends on what basis, that is financial system. And that financial system is what we can say that the financial and system, that is ultimately defined that what are that your particular three approaches over there, that is the most important in a nature. And at that point of time we can say that it is play an important role and there is an interrelationship between this segment over that economic growth. Yes or no? So which is most important balanced over there? So there is a relationship. As we learn in the financial system structure, that is structural function, the financial market, financial intermediator is institutions and financial regulators are the important. And at that point of time, my dear friends, we can say that we approached then at adequate financial system over there. And according to that system, that financial system, we can conclude it with that the economic growth is ultimately depends on your financial system. There are the other areas are dependable for the economic growth, but as we defined that the financial market or financial system is an important in nature, and the financial market is as a component of financial system. So thus we can say that the financial system is an adequate and the responsible for the economic growth of the country, as well as the for a particular business unit also. So this is what, my dear friends, ultimate define that what are that the relationship over there. After defining it, we discuss the point called financial system designs. The financial systems provide the service that are essential in a modern economy, and the use of a stable, widely accepted medium of exchange reduces the cost of transactions, and it facilitates the trade and therefore the specialization in production. The financial assets with attractive yield, liquidity, and risk characteristics encourage the saving in a financial forms. And by evaluating these alternative investments, the monitoring the activities of borrowers, financial intermediaries, or we can say that the financial institutions, increases the efficiency of resources use, and to access to a variety of financial instruments enables an economic agent to pool, price, and the exchange risk in the market. And for defining that the diversity, or we can say that to providing the services for the essential for the modern economy, that the medium of exchange is important, and for that the reduction of cost transaction is important. And at that point of time, my dear friends, the price discovery, liquidity, and the reduction of transaction cost, these three functions are play an important role. While you defining it, the financial system design, this is what, my dear friends, I felt that the all functions, that is not I am talking about that the only financial market, but in this design, the structural function, structural approach, functional approach of financial system, that the relation of issuer and investors, the financial assets, all this are combined and they play an important role while you designing the financial system. And thus we can say that the financial system has the direct relationship for the economic growth and the goal of it. So when we define it, so ultimately we can say that we exchange not only that the profitability over there, but we exchange the risk also. And we can say that to access the variety of the financial instrument, it definitely enabled the economic agent to pull a price also and exchange of risk also. And that's why the firm that stock market, the bond market, and different market directly to the government and approaches to that bankers only, that banking sector, then it is government also. So we can direct it that the relation of that firm and banking sector and the government. And thus we can say that the economic growth is depends on particular financial system design and the financial system adequacy. For that, my dear friends, the trade, the efficient use of resources, savings and risk taking are the, we can say, the correct stone of the growing economy. And in fact, we can say that the country could make this in the feasible manner with the active support of financial system, because without financial system you cannot make your economic growth. And thus the financial system has been identified as the most catalyzing the agent for the growth of the economy, and make it in a one that the key inputs of the development. And on that, my dear friends, the bank based and market based approaches differ. In the country such as Japan, France, Germany, where the banks provide around the 20% of the corporate financing, and it knows that the bank are making an significant efforts to develop a relationship banking culture with the long term loan, and the, we can say that the preferential interest rate for the clients with a good history. And this economies can be called as the bank based economy, where the bank play an important role for the financing, which is most important in nature. With that, my dear friends, and there are also some other countries where the borrowing and lending activities take place through the organized market, such as a London stock market in UK or the New York exchange in USA. This is known as a market based economy. So there are there are the two bases of economy, that is bank based and second is market based. The India approach is in both way. Although the bank are present in these countries, they are the highly competitive, and the relationship with the lender and borrowers is purely limited to the transaction of granting a loan or thinking the deposits, and the loan are the usually granted on a short term only. So in that financial system design, we defined that the two economies, that the market based economies and bank based economies. So this is what the financial system design. And accordingly, when the financial system is adequate in nature, at that point of time, my dear friends, the economic growth is an important, and you achieve your goal of that economic growth. After this, in this unit was the great help to making us to understand the basic concept of financial market. And in this unit, we have learned in a very detail about the meaning, nature and role of financial system, and we can say the financial market as a component of financial system, then the relation between that the economic growth and the financial system, and how did that cover the financial system design over that, and how the lenders and the borrowers play an important role to defining the financial system in that. So in this unit, my dear friends, we learn all these aspects. If we start the journey of financial market, this unit number 1, start with the introduction, then the meaning. In meaning that we define the relation between that lenders and borrowers, then the role of we can say the role and nature of the financial system, and then we discuss the different function of financial market. Then we discuss the different approaches of financial system, that is structural and functional. In structural plays the financial market intermediary, that is institution and financial regulators over that. Then with that journey, we defined the financial market as a component of financial system. In that we defined the 3 functions play an important for the economies. Then we discussed the financial system and economic growth over there. Then we discussed the financial system design. So this is what our connection, and this is actually the defined in that way which can you the connect yourself with the various aspect of finance also. So in this unit, our learning objective is fulfilled, and for that, my dear friends, you have to do some activities for defining that what you studied, that you learn in a great manner, in sufficient manner, in effective manner or not. That you have to define yourself in different approaches where you learned the financial market in adequate manner or not. And for that, my dear friends, you have to do these 3 types of activities. That first is long question, second is short question, and then multiple choice question. And after that, if you want to read something else, at that point of time, you have to learn about it and refer the different books over there. So in the first, the long question, you have to justify the statement called the financial market as a component of financial system. And in the second question, you have to discuss that financial system design. In the short question, my dear friends, define the price discovery function. And second is define the reduction to transaction cost function, and also in that attributes determined in a transaction cost functions. In a multiple choice questions, my dear friend, the first question is that the use of a stable, widely accepted medium of exchange reduces the cost of what? That is a transaction. The second MCQ is that the financial system has been identified as the most catalyzing agent of the growth of what? Money or economy? Then answer is economy. And after define this multiple choice question, if you want to read something else, then you may refer the books for the further reading. Hope you learn well in this manner of the financial market, that you understand well what the financial market does and what the financial market play an important role in economic growth in a financial system. So this is what, my dear friends, all about the today's session. We conclude here with the unit 1. So thank you very much. Hope you learned well. Hope you enjoyed. Thank you very much.